we'll start discussing about the stock specific move. So as of now, just to brief about the index. So we expect consolidation in the index. 19,300 to 19,100 is the critical support zone that one should keep a close eye on. Upside also seems capped. 19,700 to 850 going to be the upper band. So meanwhile, one should stay stock specific. Now, banking. So banking is basically the weak link. So it's not that the other sectors are not witnessing profit taking, but as we all know that banking and financials put together roughly has around 40% kind of a weight. And if we see such move, like banking was anyways underperforming throughout the decline. Comparatively, yes, till like mid of the week, it was also holding up the short-term averages. But in the last three trading sessions, the decline was very sharp. And anyways, we were not seeing decisiveness within the private banking space. So like a couple of private banking names were holding strong, rest of the counters witnessing pressure or witnessing decline. So banking is still a weak link, we feel. Why we are saying this? Because day before, this zone that you were seeing, this red line, right? Earlier, it was the consolidation zone. We saw that breakout. Next time when we retraced, we respected this level of 44,500 and then we inched higher. Yesterday, we penetrated that mark, though at the end, we managed to close above the same and we saw the recovery also in today's session. But penetration also indicates that somehow bears are getting control. So 44,500 is going to be the critical support in case if we fail to hold this level, this pressure may extend, and banking could be the reason that we might see the next leg of down move in the Nifty. Because it's not that the other sectors are not witnessing profit taking, but largely it could be the banking which may impact the sentiments ahead. And below 44,500, this 50 EMA is going to be the next support zone. So roughly close to around 43,700, 750. This is going to be the next major support. Upside 44,500 to 46,000 zone is going to be the strong resistance area. So far, indications are still mixed. When it comes to private banking majors, we are seeing profit taking. The trend has not reversed, was just a correction. But yes, amid this mixed trend within the private banking space, it's very difficult to, maintain a decisive view on the banking index. So as of now, one should limit a position when it comes to banking counters. Rather use this decline to accumulate private banks like Axis, ICICI, SDFC. Though we are seeing recovery in Kotak, Indices Bank is anyways holding strong, but it's a highly volatile counter. So the top 3-4 names is something that we recommend to prepare and avoid PSU banks for time being now until we see some stability. Now, let's talk about stocks where we are seeing potential of further up move or stability. So first name in the list is Bata India. So Bata India is almost like a 2-year-long corrective phase, which has finally ended this week. Volumes were decent on the breakout from this declining channel. So we had this consolidation before this breakout also. If you can see this area, we had like 4-5 weeks of consolidation before this breakout. So all these factors indicate that even if the market corrects further, the dent on Bata is going to be less. So we are expecting gradual recovery. Maybe the next swing high, which was closer to around 1950, would be the next major resistance for Bata India. And in between 1615 is something that it should hold. So Bata India is one candidate that one can look for accumulation. I wouldn't say for long position, but for accumulation in case if somebody is looking for a fresh candidate. Another stocks on the list which has ended on strong footing is Coromandel. So Coromandel, the decline was almost negligible from the record highs. it retraced to the medium-term moving averages, formed a base, and if you can see that this entire base, it was holding and trading in a very narrow band. So that clearly adds that bulls were in control, and finally we have this breakout also. So it's almost trading closer to the record high. So that clearly shows the kind of strength that this stock has. So in a market like this, wherein we are seeing correction, these stocks tends to outperform, wherein we are seeing buying interest even during the market declines. So it's not that we are going to see very strong up move from their current levels, but they are likely to outperform the market on both sides. So in case if there will be any correction, the dip is going to be gradual, and once we talk about recovery and resumption of the trend, the upside is going to be strong in Coromandel. Third on the list from the banking space. So though banking is we are seeing pressure, one stock, it's not only Federal Bank, but there are other few names also which are holding strong. But Federal Bank, why it is looking very interesting on chart is that first it's holding very strongly above the trend line support, hovering in this band, narrow band around the record highs, plus volumes have witnessed a very significant rise. So all this indicates that this kind of accumulation phase the stock is in. So once we see some stability in the banking space, this could be the first candidate where we may see fresh upside momentum or breakout. So Federal Bank is third name when it comes to the stocks that one can look at. And lastly on the list, LIFC Housing Finance, witnessing very volatile swing these days. But finally, we have a decisive, week with volumes on the weekly chart. So it was also trading in a corrective tone, and of late we have seen very sharp moves on both sides. But finally, during the week, we saw that it managed to hold above the trend line with very strong volumes. You can see this. This is the volume candle. It's almost like 3 times, 4 times of the average volume. So we expect this momentum to continue and extend further. 440 is the immediate hurdle, which almost we have tested. Above that, there's a possibility that it might retest the record highs. So net, we've talked about both the indices. So Nifty, yes, it's comparatively better when it comes to the indices, in comparison to the banking index. But we need sustainability above the short-term average to extend the rebound that we are seeing right now. 19,300, 19,100 will be the major support zone to look at on the weekly charts. As of now, structure looks positive comparatively. And another important aspect is that though we are seeing profit taking in the US markets also, global markets also, but the trend has not reversed. So that is also further adding to the comfort that we might not see any major correction in our markets. So, but yes, we are seeing profit taking. So stay stock specific. Among these stocks, we talked about Bata India first, followed by Coromandel, Federal Bank, and LIC, where we have strong closing with volumes, despite the weak market structure. So one can look at these names for long position or for accumulation. So yeah, that is all from the presentation part. Now we'll do a quick poll, and so please fill in your feedback, and then once you're done with the feedback, you can start posting your question using that Q&A tab. Please quickly fill this feedback, and then we can start with the Q&A. And please restrict your questions to the sectors, not the individual stock specific queries, please, so that it benefits the larger audience. if you are done with the feedback, you can start posting your question using that Q&A tab. All right, let's start with Q&A now. Okay, so first question from Mr. Kumar, Aditya Kumar on aviation sector. So aviation sector, we have very limited players to comment upon, and Indigo obviously is the best counter based on the overall price performance in the last recent year, plus the stability of the trend also. So this is the only stock that you have, in case if you want to invest in, because SpiceJet is not something that we can, vouch on, considering the kind of, volatility that the stock observes. Okay, next we have Mr. Syed Javed on pharma. Yes, pharma is one sector. In fact, pharma and realty both. So of late we have observed this trend that the leading sectors, banking, auto, FMCG, they are sitting on the sidelines, and sectors which were not participating earlier in the same quantum, we are seeing traction there. So pharma, realty, metals, energy counters, they were, till last week, witnessing very strong traction. And in fact, in this week also, if you've observed that pharma was among the top gainers. So we feel that the move has been very strong, when it comes to select names like Oro, Glenmark, Lupin, Sun Pharma is anyways holding strong. Some of these stocks are doing exceptionally well, but the rest of the pack, they are almost sitting on the sidelines. We are not seeing any action. So after this, recent performance, we feel that one should stick with the names wherein we are seeing traction. So you might argue that they are already up, why we should, venture into something which is already up, let's say 30-40% in 1 month. So the idea is that in case if we are not seeing participation in such a good time in the other pharma counters, I doubt there will be any meaningful participation when the market is going to correct. There's a possibility. I'm not saying that one should go ahead and accumulate or buy all the pharma counters which are performing well at current levels. Accumulate them means they might go in some consolidation. So wait for that consolidation when it comes to the stock like Sun Pharma, Oro Pharma, Glenmark, Lupin, instead of looking at Dr. Reddy's, Divi's, Biocon, which are not participating in them. So once we have this kind of participation or maybe the resumption of the trend in the other counters, we might look at them. But as of now, these are the top names that one can gradually accumulate during this corrective phase. Okay, so next, Mr. Avik Ganguly on, is it a good time to pick up power-related PSUs? I guess, Mr. Ganguly, we are late on this, to be honest, because we all know the kind of traction that we've already seen. It is true that it's not 100% one can vouch that whether we are seeing a top, but after such a strong move, especially in the PSUs, power-related PSUs, without any consolidation, in case if we enter, at current levels, we might end up, entering at the wrong price, because mostly stock, they have almost witnessed double or maybe more than that kind of a move in last 2-3 months. So the idea is they are looking strong. There's no doubt about that. But let's wait for some consolidation. In the power space, Tata Power, I feel, still has a room, for further upside. because it has not participated the way that we have seen in the PSU pack. And so yes, Tata Power is the only name that which I can recall wherein we have the comfort that one can look at the current levels. Otherwise, all the other counters, be it the financing part or the distributors, they all have done exceptionally well. So wait for some consolidation for fresh buying. Okay, so next, Mr. Deepak Kumar on the metal sector. So metal, as like we were discussing that metal also witnessed a catch-up move, but we are seeing volatility in metal space for the obvious reason because the global data basically dictates the trend, and whenever we have anything negative from China, that impacts the sentiments. So as of now, we feel that one needs to be selective in this space. After this decline, I still feel that Hindalco, Tata Steel, JSW Steel, Jindal Steel, these are the names which one can continue to look at. Other stocks like National Aluminum, SAIL, wherein we are seeing traction, Hind Copper, which has already witnessed very sharp up move. One needs to be selective in this space because usually we see that these stocks go for prolonged consolidation or corrective phase whenever the market turns, the metal cycle turns. So stick with the top names and accumulate them, not for a very short term, but let's say for a month or two kind of a view, then one can accumulate metal counters. All right. So Mr. Vikram Sharma has this query that where we can listen to the recording of the webinar. So you please visit our social platforms wherein we post all the links, YouTube links. You can go to our YouTube channel directly also, Religare Broking. And from there also you can just see this webinar recording. So that, Mr. Sharma, we have already discussed that no individual stock-specific queries, but as we have said, in the metal space, we have named a few counters also which are looking, comparatively stronger or relatively safer, in the market like this. So one should stick with the top names, avoid the names like National Aluminum, SAIL, Hind Copper, and Hind Zinc kind of names. Because usually we see sharp reactions during the corrective moves in these counters. So there's a query from Mr. Arvind on broking companies like perception. So I feel that when it comes to the short-term performance, it's a very mixed trend that we are seeing within the broking basket. So it's more of like the individual companies performance is something which is different. Earlier, like in 2020, it was broad based that we were seeing buying across the broking related stock, but that is not the case right now. So it's more of like individual stock specific approach that one can look at. Any questions related to any particular sector? We have answered almost all the queries around the sectors. Stock specific that we have recommended in the beginning of the presentation, that is something that we avoid for the benefit of the larger audience. So anything related to any sector? All right, so with this, we have answered all the queries, yes. And so thank you everyone for participating. And next week, same time, we're going to connect again and we'll talk about what we have discussed today. And then the future outlook for both the key indices, followed by some of these interesting stock charts. So till then, take care. Goodbye. Thank you.